Welcome to the first episode of Core Conversations, a CoreLogic podcast. I'm your host, May Claire Bolton Smith, and I'm the Senior Leader of Research and Content Strategy with CoreLogic. In my role, I lead thought leadership, covering hot topics like the COVID-19 pandemic and hazard event response. I'm passionate about property data and how the insights we can glean from it can and do fundamentally affect the economy and the world we live in. That's why I'm thrilled to be hosting this new podcast, focusing on everything from housing affordability to the impacts natural hazards have on property, and really focusing in on the property moments that matter most to you. We'll have expert guests that can truly speak to the housing economy and the property market. In our first episode today, I welcome Pete Carroll, Executive of Public Policy and Industry Relations at CoreLogic, to talk about how the COVID-19 pandemic has impacted the housing market. So let's get started. Pete, thank you so much for joining me today as our very first guest on Core Conversations.
Thank you so much for having me, May Claire. I'm really excited to be here.
So before we get started, can you tell our listeners a little bit about your background and your role here at CoreLogic?
Yes, of course. So when I graduated from college, I started my career as an intern on Capitol Hill, which was a great experience. Spent some of my formative years as a management consultant. And then in the year 2000, founded right around the dot-com boom, co-founded a fintech company focused in the housing finance industry. Rode through the financial crisis and exited the company in 2010, after which I started a role at the Consumer Financial Protection Bureau as it was being implemented from scratch, a new agency built from scratch from the Dodd-Frank Act that was in response to the global financial crisis. I had a wonderful 3 years there, and after leaving the CFPB, where I was involved in developing the mortgage regulations impacting the housing finance industry, I spent a few years at Wells Fargo and then Quicken Loans, where my role was a mixture of credit policy, capital markets, and public policy, and really the intersections between the three. And now I'm delighted to be at CoreLogic, where I've been using CoreLogic data and analytics my entire career throughout that entire span of roles I've had. And my role here is very similar, where I try to analyze public policy initiatives underway and how they impact our clients and how they impact our company and the provisioning of our products for our company.
That's so great, and really the reason why we wanted you to be our first guest today, Pete, because you've got such a great background and such a broad range of experience as well. So with that, let's just dive in. For the past several months, we've all been immersed in the COVID-19 pandemic, and it's disrupted nearly every aspect of our lives. So can you talk a little bit about how COVID-19 has impacted both the housing market and the home buying process?
Yes, absolutely. I mean, it has absolutely had a very, very significant impact on both. Most notably, towards the start of the COVID-19 pandemic, many states issued stay-at-home orders, which I'm sure you recall. And that just created a lot of practical logistical concerns with respect to the home buying transaction. Certain businesses were permitted to stay open during the pandemic, during the early stages of the stay-at-home orders, but there were essential businesses that were allowed to continue. In either event, whether it was a critical business or not, there was still the dynamic of homeowners or just people in their homes not wanting third parties, people they didn't know, entering their home, strangers. Likewise, there were, for example, independent appraisers, the people who come to the home to assess the value and condition of the home, who probably didn't feel too great about going into the homes of people they were looking to do business in. It was just a very uncertain, fearful time. That This dynamic has leveled off quite a bit since stay-at-home orders have been lifted in most states, and people have become more comfortable with some of the measures put in place to try to attenuate the risks of others being in their home. Just typical precautions around all the things we do now, wearing masks and putting boots on your, covers over your feet and over your shoes when you enter someone's home, and trying to minimize the impact on the home, leaving any kind of fingerprints behind that could transmit the virus. But it's still a relevant issue, of course. And thankfully, there have been a number of changes, policy changes, both at the federal and state level, that have permitted digital transactions to occur to keep our business rolling and keep mortgage originations flowing and real estate closings and transactions flowing during this crisis. And it has been one of the bright spots in our economy.
That's so great because definitely interesting times that we're living in for sure. So, have we ever experienced a housing market like this one before?
Never. No, this is a totally unique incident for the country. What's so challenging about the situation is that it really is a natural disaster. So in some ways, it's not totally dissimilar from, say, a really bad hurricane that comes through and creates massive devastation, loss of life, loss of property, but and loss of employment, very notably. But this is a global scale, not a regional scale. So, a big hurricane or tornado moves into a region, it's a regional impact. We've got a strong national economy to buffer that. But something of this scale, that's global in nature, that has resulted in whole economies shutting down, is unlike anything we've ever seen before. So it's hard to know which policy tools policymakers should use in response. Sometimes it's lessons learned from natural disaster experiences. Sometimes it's lessons learned from past economic events, such as the financial crisis, the mortgage crisis, and global financial crisis. Sometimes it's both.
It's interesting that you say it's just like a natural disaster because I think a lot of people don't necessarily equate it like that, but it really is. And I'm kind of a natural disaster planner at heart, and that's been much of my career throughout my life as well. So it's something I really identify with is this being on the scale of a natural disaster, but globally versus just in a localized area. So I really appreciate what you're saying there. So if we think a little bit more about something that we've heard a lot about in the past couple of months on the government level is the CARES Act. Can you talk a little bit about how the CARES Act has changed the market? What does it mean for homeowners? I know that it was brought in to help homeowners during the pandemic, but where are we now with it?
No, absolutely. So, just by way of a quick introduction, the CARES Act was a critical piece of legislation that was passed shortly after the outbreak of the COVID-19 pandemic. Created a lot of both economic stimulus and support for American citizens who were experiencing just terrible, not to not the least of which was stay-at-home orders, but loss of job, loss of income, a number of programs to help stimulate the economy and keep it moving. One of the major provisions of the CARES Act was what was called the foreclosure and eviction moratorium and the consumer right to request forbearance. And what this essentially meant was that for a period of time, that time has now expired, but for a period of time, lenders were not permitted to foreclose on properties and landlords were not permitted to evict their tenants, which was very important as we were going through, particularly the early and early stages of the pandemic and the most severe portions of the pandemic. The other part, the right to request forbearance, really applied to mortgage loans, both single-family and multifamily mortgage loans. But for the average everyday homeowner, the single-family residential forbearance was the most pertinent. And that said that for up to a period of a year, any mortgage borrower who has borrowed from one of the federally backed mortgage lending programs, which includes Fannie Mae, Freddie Mac, the government-sponsored enterprises, but also the Federal Housing Administration, FHA, Veterans Administration, VA, and the Rural Housing Service and the U.S. Department of Agriculture. Those three loan programs provided by those agencies were also included. And they all provided the ability for homeowners to pause their mortgage payments for up to a year. And that is still ongoing today. And we're seeing a mix of reactions from homeowners. Some have what one might say preemptively requested forbearance on their mortgage payments. And by forbearance, what I mean is a pause. So the idea behind the forbearance request is a homeowner could call their mortgage servicer, the person they send their monthly payments to, and say, I'm having a hardship due to this pandemic, and I really need a break for a little while I kind of get my economic feet back under me. And I would like to pause my mortgage payments for a period of time. In this case, it could be up to a year, but it could be less. And we've seen a mix of some people requesting forbearance but still making payments, others requesting forbearance and pausing their payments as intended, others who have requested forbearance and paused their payments, and then subsequently exiting and going through what's called a loss mitigation process. And loss mitigation is just a way of saying, for all these paused payments that have happened over a period of time, we need to figure out a way to get the homeowner to catch up on those payments. And all of those programs I mentioned earlier have all come out with special policies designed to make it much easier for a homeowner to defer those payments and make them up at the conclusion of the mortgage, so that it doesn't have to, they can just ideally just pick back up on the payments they were making before all of this started, and worry about all those arrearages or missed payments, paused payments, and push those to the end. And that's been a very important feature.
That's so important. That I think one thing with the CARES Act that a lot of people didn't understand at first is that it was essentially putting your payments on pause, and that you still were responsible for paying your mortgage. But what's interesting is that, and I don't think I personally understood this, is that they're tacking that on to the end of the payment of the mortgage versus having to catch up 6 or 12 months immediately when you start paying your mortgage again. So that's really interesting and really important for people to understand, I think.
Absolutely. There's also been policies that have been put out temporarily by these federally backed lending programs I mentioned, the GSEs, FHA, and the Rural Housing Service, Fannie Mae, Freddie Mac, the GSEs, designed to try to keep the process, the supply chain of mortgages flowing smoothly. And they include in the originations and process. So the process when you apply for a mortgage, it's called going through the origination process. And there's been tremendous activity both at the federal and state level to make sure that any legal barriers or other policy barriers to enacting a digital mortgage or completing a digital mortgage are removed. And that has proven to be quite successful. We've seen a significant uptick in homeowners who are applying for mortgages and doing the entire process digitally. And then that includes the process of underwriting a mortgage. So when I apply for my mortgage and the lender underwrites my creditworthiness, being able to do all that activity digitally, including my submission of my own financial information, my income, asset, and credit report or debt information can all be done electronically now. And then maybe more importantly, the closing process. Anybody who has ever had a mortgage, has bought a home and had a mortgage involved in their purchase. You probably recall going to an office of a title company, settlement company, and having a large stack of documents on the desk and having a notary there. You sign the documents in a big ceremony. A lot of that activity is moving online, which has been very, just critical during this period where people have not been able to leave their homes or have been reluctant to leave their homes. And then likewise, I'll just kind of cap this off by talking about the appraisal process, which is, again, if you've purchased a home and taken out a mortgage in the process, you probably recall an independent appraiser coming to your home to inspect the exterior and interior of your home, so they can document and take pictures of the condition and quality of the home, which they then subsequently evaluate and come up with a value figure that they send back to the lender. And that a lot of that activity, there have been flexibilities put in place that would allow that activity to continue happening without the appraiser having to actually physically go to the home and conduct that inspection inside the home.
That's so great. And it's so interesting because it's amazing how quickly we've adapted to be able to do all of these things virtually so quickly during this time of need. And especially, I look back at when we closed on our home and the stacks and stacks of papers that we had to sign. And now just knowing that all of that can be done electronically and digitally It's just so amazing how technology has moved us forward so quickly. So that's really great.
Yeah, I agree with you.
Yeah. So if we pivot just a little bit now to talk about affordable housing, we know that this is a big concern in this country long before the pandemic ever hit. So, how has COVID-19 influenced affordable housing issues?
It is such an important issue. It's an important issue to me. I know it's an issue that's important to most people in the country. It's considered to be a bipartisan issue here in Washington, D.C. It's not an issue that is on either side of the aisle. Both sides of the aisle are very concerned about it. And I got to say, I mean, COVID-19 has just been a double whammy for this issue. As you noted, affordable housing challenges were with us before COVID-19 arrived. They were reaching critical proportions by the time COVID-19 arrived. And now there's real genuine fear that COVID-19 has the potential to just double down and double the pain of affordable housing issues in the country. And just in terms of issues, the problem is we just don't have enough affordable housing. We don't have enough from a home ownership standpoint. We don't have enough from a rental standpoint. It's not an either or, it's both. And it means we need more what's called multifamily homes or apartments going in that would make affordable rentals available. We need more single family homes at lower price points that would allow more people to become homeowners and do so in a mix of different home styles that increase what we call soft density, where even in traditionally single-family residential neighborhoods, the ability to put in a mix of types of homes that can range from your traditional single-family detached house to attached structures like duplexes or townhomes that would put 4 units into the same plot of land as opposed to one. These are important ways to kind of add more supply into the system and drive down the price over time. It's worth mentioning really quickly that one of the lessons we learned in the financial crisis was that undoubtedly in many cities across the U.S., the foreclosure crisis disproportionately hit persons of color and people of low to moderate income. And it was almost a little bit of a double whammy where the foreclosure crisis hit. People just couldn't sustain their mortgage payments. They had to move through the foreclosure process and exit their homes. And then there were just so many of these foreclosed properties on the market that when they were sold off by the investors in these mortgages, which include many of the federally backed mortgage programs we were describing earlier, they were sold off into the capital markets where our capitalist system does what it does really well, which is it takes private capital and efficiently allocates it. And a lot of these homes were then purchased through foreclosure and then rehabilitated and then turned around, put back out on the market and rented as single-family rental companies, as single-family rental homes. That was what I like to say about this is two things can be true. One is that it was an important way to kind of clear the foreclosure backlog that was, had the potential to really depress home prices and restore an equilibrium in pricing, normalized pricing in the market. But it also kind of really created that double whammy on loss of home ownership rates in particular for African American and Latinx homeowners. And both are true, and both things can be true. And I think one of the challenges coming out of COVID-19 this time will be to take all those lessons we learned the last time, make sure that we're doing everything we can to help keep homeowners in their homes through this crisis. And then invariably in these moments where people just cannot sustain their mortgage payments due to this pandemic, trying to find creative ways to recycle these distressed properties back into communities so that new homeowners can come in and help maintain the integrity and fabric of the neighborhood, and hopefully continue to serve persons of color with homeownership opportunity. So that's one thought I would point to. The other is we just need to be doing more. When you really segment and look at who is most impacted by the affordable housing crisis, we're talking about extremely low income and very low income citizens. So we're talking, and those are defined as an extremely low income person has an area median income. They're below 30% of their area median income. So the neighborhood they live in, they're below 30% of the median income earned in that neighborhood. Very low income is also heavily impacted. The very low income is defined as 30% to 50% of the area median income. So these are very low income folks. It tends to be a affordable rental situation in these lower income brackets, but just we need to have a significant amount of more supply put in there. Interestingly, however, there are studies that we've been researching and developing ourselves that show it's not exclusive to those low income, very low income, and extremely low income. Even when you get to 100% of area median income, or even 120% or greater of area median income, there's still a tremendous dearth of homes, particularly for 2 and 3 bedroom homes, which are in high demand. And those tend to be more on the home ownership side of the equation, where we want to see more home ownership opportunity there. So what are some of the things we can do about it? There's been a number of bipartisan legislative proposals that have come out, and for the first time, we're starting to see housing issues become a platform issue in the presidential election. And as I mentioned before, this is a bipartisan issue. So it comes down to what are some of the strategies and tactics to try to solve this problem. I'd point to a few things. One would be more investment in proven subsidies. We've got programs such as the low-income housing tax credit, which is just crucial to getting multifamily apartments for rent built out. It's proven that it works, and we need to scale it more. There's housing trust funds and grant programs that are provided that do a number of things, from help subsidize the economics of a development project to providing down payment assistance and the like to aspiring homeowners. These are very important subsidies that we need to be focusing in on and identifying the ones that have proven to really work and accelerate them. Another thing we have to do, this is in a number of proposals I've seen, is arming municipalities, cities and counties with better data and analytics to target and prioritize the use of these subsidies for affordable housing development purposes. So, it's one thing to make subsidies available, but they have to be delivered at the local level. So state agencies and local agencies allocate all these tax credits and grants. Land developers use them to enhance the economic proposition of the projects they engage in, and that's important. But if we don't have the right data and analytics available to these decision makers to identify the best places, the best locations, remember the old adage, location, 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 that's true of everything, including where to place affordable housing to get the biggest bang for the buck. We need the right tools to help decision makers figure out where to place affordable housing, and then how to quickly model and design and model what to build and how to build something in a way that will achieve many of these policy objectives, such as restoring rates of home ownership, for example, for the African American and Latinx communities and other communities, while still making the development proposition economically positive one for the land developer, who is, of course, looking to make a profit. The last thing I'd point to is innovation, technology innovations, in particular new manufacturing methods, which can really have tremendous promise in just driving down the costs of building homes. So, one of the things that always kind of blows my mind is that when you think about how we build homes, it hasn't changed much over the last 100 years. We call it, the term is stick-built homes, right? Where it's wood, brick, and kind of traditional methods of building homes. And we have things like automated nail guns, which speed up the process and make it more efficient. We haven't fundamentally rethought the process of building homes. And there are new techniques and tools available. We've seen things like manufactured housing or modular housing, where most of the homes put together off-site and then shipped in and finished. That's one way. We're seeing investments in really cutting-edge capabilities like robotics and 3D printing, where you can actually have robots building these homes in automated ways using more durable, energy-efficient materials. which just has a potential to drive down costs tremendously, 30% or more. And so these the combination, it's not one thing, it's the combination of all of these arrows in the quiver, so to speak, that will get the job done.
Yeah, that's also interesting because it's not just one thing, and it's such a deep-rooted problem that is nationwide. And yeah, you've touched on so many important things, and I think the key is getting that data and analytics to the right people making the decisions to try and make a difference. And it's funny when you said we haven't changed the home buying process or the home construction process in 100 years. I had never thought about that before, but you're right. Like, it's essentially the way we've built homes now is the way we've always built homes. So, with a few little exceptions of modular homes and manufactured homes and things that are coming up now. But yeah, that's really interesting. I hadn't quite thought about that perspective before.
Yeah,
So,
a lot of interesting things on the horizon, a lot of great innovations that will hopefully really make an impact here.
So let's stay on that topic of innovation, actually, for a minute. So to wrap up, I want to get a little techie. And the Internet of Things and smart homes have been growing in popularity in recent years. And I know in our home, I'm no longer allowed to turn the lights on with a light switch. I try and I get in trouble. But we now used to use an app or ask Alexa to turn the lights on for me. Or if there's anyone at our front door or near our house, we instantly get a text message with a photo that shows the person outside of our home. So, can you talk a little bit about the Internet of Things and smart homes in this day and age? All of these conveniences that many of us get so excited about, are they a good thing?
Oh, I love this question. I'm so excited to talk about this. It's another one of just one of the topics that just really I find it tremendously interesting, because on the one hand there are just so many really fabulous innovations that are out there. I suspect listeners of this podcast, we're probably hard pressed to identify a listener of this podcast, or really anybody, who doesn't have something in their home that would meet this criteria of the Internet of Things or smart homes. If you have a thermostat you can control from an app on your phone, if you've got Alexa, or one of the equivalents, Google Assistant or the like, one of these appliances in the home that you can ask questions to and get answers. This is all the Internet of Things. It's all audio, video technologies driven through the Internet. Nest cameras has become a very big innovation, and Nest is one example. But the ability to have constant around-the-clock video and audio surveillance of your property, outside the home, inside the home. One I like to point to is smart beds. I myself just purchased a smart bed, and what I find fascinating about it is how I have an app that can monitor my sleeping habits. It can tell me when I'm waking up in the night and how long I'm waking up, and it's correct. It's all quite accurate. There's just sensors all around the bed. These are all wonderful innovations. They stimulate our economy. They catalyze new innovations. They provide tremendous efficiencies and conveniences to consumers and homeowners in our country. But the other side of this, the double edge of the sword that we just have to be looking out for is the obvious, what would be the obvious problem of information privacy. When you start to take the totality of all these innovations and think about the type of information that these appliances are gathering, it's quite staggering. Even just going with my smart bed example, the idea that there's a company, and I won't name the company. The company's irrelevant. All these like bed companies have innovated in this space now, but they know Pete Carroll and they know his sleeping habits down to a T. That's a little bit creepy when you think about it.
Like creepy when you think of it, yeah.
I bought into this, right? I don't want to slam it either. I bought this bed. I'm delighted by this bed. It's like transformed my sleeping life. I sleep way better, and this app shows me how I'm sleeping better, and it gives me tips to improve my sleeping habits, and I love it. But one of the challenges of all this tremendous innovation, all this big data, is that it's aggregating, and it is being aggregated increasingly by fewer and fewer entities. And that in and of itself isn't a problem. It's more that we just have to be mindful that when there are companies that have access to this information, we need to be aware as citizens of our country, and just aware of just how much influence this data can have over our day-to-day lives, and make sure that we have to make sure that the companies who are stewards of this really critical data about all of us are using it in the appropriate ways. And I'm sure by and large that is true. But with any industry, there's always the potential for bad actors or even inadvertent bad acting, where there's information security breaches from bad actors who are targeting good actors who are trying to do their best. This really is just going to be a new frontier, I think, going forward. Is what is the right regulatory framework that would not disrupt all of this tremendous innovation and keep it flowing and keep it moving, keep it growing. It's one of the things that differentiate. Technology has always been a huge differentiator for the U.S. economy, and that has to be the way it is. But at the same time, we need to be mindful of some of the bad things that could happen if the wrong data falls into the hands of the wrong people. And like everything else, in my view, it's a balance, and I'm sure it's a balance we will strike.
Yeah, I'm sure we will, but information security is key. And that's something that's such a huge problem with everything we do these days, because everything is so electronic. So, well, Pete, this has been so great. Thank you for joining me as our first guest on Core Conversations, a CoreLogic podcast.
Oh, it's my pleasure. I had an absolutely wonderful time speaking with you. It's such an interesting set of conversation topics, and I'm delighted to be here and hope we can come back again.
I would love to have you again. And we will have more interesting conversation topics as we continue with this podcast. So for more information and insights on the property market and housing economy, please visit corelogic.com/insights. I hope you've enjoyed our first episode, and please remember to subscribe wherever you get your podcasts to be notified when a new episode is released. Thanks for joining us. I look forward to seeing you on the next episode.